And let's just check on YouTube real quick. If you guys are coming on, make sure that you introduce yourselves. You can ask questions in the comments. I'm going to introduce Will here in a second.
Well, that's one thing, Mike, I also want to point out, as we're live on LinkedIn, any questions for Will, put in the comments on LinkedIn. And if we don't get to them in the live stream, I'm sure Will answer them in the comments. So put them in no matter what the date is, the time, and we'll try to answer all of them. The Entre team will answer them.
Exactly.
If you got any questions about office rents and rent deferment, put those in the comments, and we'll all try to answer them and help you out as best as possible.
Exactly. Yeah. Okay. It looks like we're good on LinkedIn, and I'm setting up. And on the website right now, looks like we're getting people on our website asking about this too. So we should be good to go here in a couple minutes. Let's let some people come in. I know it's just 4:02 right now. So we'll give it another couple minutes here. Let me bring on Will Winter, who's been one of our partners, sponsors. He's a fantastic entrepreneur himself, and he obviously runs an accounting firm. He's a CPA, MBA. He's been diving into a lot of this stuff and doing a lot of research on what the heck is going on right now with the stimulus package and the different loans and grants and all of that. So, Charlie, thank you. I'm going to kick you off now and bring on Will. If there's anything else that you wanted to cover, but I think we'll introduce Will here and we'll get things rolling.
CharlieNYC.com. That's it.
CharlieNYC.com, at CharlieNYC on social, I believe. And yeah, thanks, Charlie. Okay, let me bring up Will. Hey, Will.
Hi, how are you?
Doing great. I think we're pretty much all set here. Let me just make sure that we're streaming on our website, and we should be good to go. Let's make sure everyone can see us, and I think we're all set. So if you want to introduce yourself, and then what we can do is, if you want to dive into, I know you have a presentation prepared. I'm going to also bring up Colby here at the beginning, dive into some of, he's an actuary, he's a CFO advisor for Entre as well. He's been bringing in a lot of the data and stuff. So I'm going to introduce Colby as well, and then I'll kind of let you two introduce yourselves, and we can get things kicked off here. Hey, Colby.
Hi. How's it going, everyone? Okay. Well, I'll kick it off here. I'll be a warm-up or opening act here for Will, who has a lot of great insight and research that he's going to present that's going to be very useful for many businesses. As Michael alluded to, I'm an actuary by trade, credentialed actuary, mostly working in healthcare for the past 15 years. I've also worked with a lot of startups in financial modeling and CFO support. These are indeed very, very tough times. We have a combined public health crisis entering into, bear market that is facing us. And then we also are on the heels of 10 million jobless claims in the past 2 weeks in this country. And that's not going to stop. So what does all this mean? Whether you're a business owner, you're a startup, that's what I really want to set up the stage for Will. There's a lot of fear and there's a lot of anxiety, understandably so. But we all get through this together as a nation, as communities. Just keep with that, and we will keep flattening the curve, and we'll get through this quicker than later. And that way, all these solutions are more stopgaps. But what I want to focus on is, if you're a business owner or if you're a startup especially, there's a lot of different opportunity. Just because there's a lot of risk doesn't mean there is potential opportunity. And if you really look back in past recessions, which we feel that we're about to enter, some of the biggest names have come out of prior recessions, whether it was Uber, Airbnb, Stripe, a number of others. They all came through the last one. You look back to the dot-com crash. Google and Salesforce were big ones that, while they were established, they found a way to weather that storm and come out even more powerful. This is your opportunity to do just that. We understand that, especially a lot of early stage early stage startups, the investors that they're working with, they are going to be hedging their bets. Markets have taken a beating, and that's going to impact them. It's going to impact investors, whether they're institutional or not. This has a trickle-down effect. If you look at investors, it doesn't mean that they're not going to be investing in the startups, whether they're pre-seed and seed or Series A and beyond. There are plenty that have dry powder. That money is essentially money that's already put in there from their investing partners, and it needs to be deployed. If it's not deployed, there's not going to be returns for their investors, period. So they're going to want to invest it. They still have these quotas to meet, but they might become a little more restrictive. You need to understand the market that you're in, and they're going to want to see startups with founders who are nimble, they're creative, and how they manage these tough times. They want to see founders who are acutely aware of what their burn rate is and how they're mitigating that. Instead of having 3 to 6 months runway, you really do need to have a plan to have 12 plus months runway, and not even taking into account potential revenues that you would bring in place. Valuations is another thing that might get a haircut. I think there's been a lot of stories over the past few years where valuations, whether they're at seed stage or Series C, D, and beyond, they're a bit higher. Everyone felt they were been inflated, and that bubble is going to burst. Everyone looked at WeWork as a recent example. Well, this systematically has essentially put this haircut opportunity, because let's face it, when you're an investor, you're an investor into a VC, and you're going to put more money in there, or you look at the stock market, which has taken a 20% plus decrease, you're going to look for buy opportunities, and there's a lot right now. So it's an exciting time for an investor as they look ahead. But you as a business, you need to make sure that you have the finances lined up, but you also look back at your business strategy. Customers, a lot of your customers have been impacted. If you're a B2B type business, a lot of your businesses that your customers, they've had to lay off employees. They might have lost some of their customers as well. If you're B2C, individuals might have lost jobs. So depending on what your price point is, they might be cutting back just in their own budgets. And that's exactly what all businesses need to do themselves. There's a ripple effect through this. Sales pipelines may be delayed. So what this really is what I call a buy versus this build mentality. So it's going to skew to where you have the potential highest return on investment. So if you're going to ignore things around your budget, saying, okay, these are going to be expenses that are going to weigh you down, and focus a bit leaner. And of course, everyone knows what the lean startup approach is, but you really have to follow that mantra now. As far as finances, and a couple more things before I pass it off to Will. If you haven't assessed your cash flow and how things are going to dramatically change by now, then you're already way behind. It's not too late, but you might need to make some rash decisions here pretty soon. Burn has to be assessed, like I said, without revenue, but it's like a home budget. You need to look at your needs, look at your wants. What's going to help you really grow? What's going to help you get to your end solution? What is your mission as a business, and how do you do that? There's a lot of opportunities to build a sales pipeline without actually having sales, getting letters of interest, getting commitments, drawing up this interest, building up prototypes. Use this opportunity to build to those solutions. As far as budget review, you have to look at everything. You look at not only your sales, like I was mentioning, whether it's B2B or B2C, whatever your customer is, but you have to look at your suppliers. Which ones can you reduce? Why are your accounts receivable looking? Your accounts payable? Headcount like? Do you have flexibility with contractors or different folks? What are working hours like? Depending on the stage of your business. If you're a founder, look at your own salaries. How can you help your fellow teammates out so people aren't going to hurt? Everyone needs to meet in the middle when it comes to these situations so people don't get unfairly hurt. And then, like I said, the big thing is the product and R&D. How can you focus on what is the ultimate milestone and really get to that with or without cash? Revenue forecast, I don't think I have to say this. You obviously want to be a little more conservative. It's a really unique situation because I look at it as an actuary, I look at it from the pandemic purpose. This might be a first wave and we're going to go through and flatten this curve, but there's going to be ripple effects as we go throughout this year. At some point, that unemployment that we're going to see skyrocket, it's going to slingshot back. But a number of businesses, they might take a while till their investors follow up and they can reopen. Some businesses are going to close. So as you look out, the ripple effects of that might be going 6, 12, 18 plus months. And so people are going to pull back in a lot of different ways. That means, so if you're a startup and you're looking for different capital, really continue to work within your network. Like I mentioned before, angel investors, venture capital firms, they still have dry powder, especially if they're institutional, that they need to deploy that money, but they're going to be a lot more restrictive. So how can you take advantage of the risks in the scenario that we're in and make it an opportunity? Beyond just pitching for investments, there are a number of different things that you can explore. There's venture debt, there's revenue shared loans. If you have kind of a mature business that's had 10, 25, 50, even 100,000 revenue per year, there's a lot of revenue sharing loan opportunities. There's a number of small business loans, which that's really sets up the stage for Will, who's going to go into a lot greater detail because there's a lot of new opportunities considering the crisis. There's, of course, credit lines, but you don't want to go too far in that. And even go back to insider rounds of financing. The one last thing I'll speak to on any angels or VCs is they're going to look at their own portfolio. And instead of having a 3-month outlook, how can they better help a lot of their winners so they don't get too hurt in this crisis? So they might be doing some reinvestments and follow-ons rather than too many new companies. So if you're a startup and you have investors, definitely look to your inside rounds of financing. With that all said, I think the themes are pretty clear, but there is a lot of opportunity, and it's not all about anxiety and despair. There's a lot of hope. There's a lot of government solutions as well, and Will's going to go into great detail. And I know there's a lot of noise and a lot of information that is out there, and it's tough to go through, but that's why we have Will here to help walk through all these different solutions. So without further ado, I'll pass it off to him.
Fantastic, Colby. And one thing I want to stress too, to complement what Colby was talking about, is I think I want to add, you should be implementing a budget. If you haven't already, use the budget system. A lot of business owners, look at a budget. They have every intent of following the budget. In normal circumstances, they'll let it fall by the wayside and maybe be a little bit more reactive than proactive. Now's the time to be proactive with your budget. Hey, listen, you're cooped in your home. Start a budget. See what your budget is for the next week while you're in the house. You're still going to be spending money, believe it or not, right? You're still going to have utility bills raking up. Just start a budget. Now's the time to practice that. So when we're back full swing, you know what? You'll be ahead of the game. So thank you, Colby.
Mm-hmm.
Hi, everyone. Will Winter here from Winter Accounting Advising, LLC. We've been in business for about 3 years now. We worked a lot on this project. We wanted to have this webinar because a lot of our clients and just everyone around the world, or better yet, around the United States, was very confused, and all this literature came out on all these opportunities for loans or grants or tax deferrals or just free money. When I started reading it as a seasoned professional, I started getting a migraine, but I stuck with it. We had a lot of clients calling up, asking us questions, leaving us emails, and so we took time out of our busy tax season these last several days, about a week or two, and we really dived in and did the dirty work. And we tried to create maybe 15 or 16 slides that'll help everyone out there zone in on where they can take advantage of these opportunities. Before I get started, I wanted to thank Mike Mara and the Entre team for holding this webcast in such short notice. Everything about this COVID-19 relief is on short notice. The IRS just posted another update today that clarified one item that's in my PowerPoint. So I will deviate from my PowerPoint at one point in time and clarify one thing on that slide. Without further ado, I'm assuming everyone can see the PowerPoint. It's my understanding that this PowerPoint and this webinar will be available on various social networks, especially YouTube, on the Entre YouTube channel.
Yep.
And feel free to get a hold of us as well at will@windercpas.com, or give us a call at the number on your screen. We can also get you a live copy of the slide and answer any questions that you may not be able to get to during this webinar.
Yeah. Hey, just real quick before you get started. Yeah, everybody. So you'll be able to, this will be up on our YouTube channel forever. You can comment there. You can comment on LinkedIn, or you can actually comment if you're watching it on our website. There's a little chat there as well. I'm going to be on there to chat with you guys. If you have questions, just drop them in there. I'll be responding the whole time. And like Will said too, as we go through things, you can send them an email. We want to be a resource for everyone, and we want to help everyone get through these times and make sure that you're, getting educated on the resources and, the loans and all this stuff that Will's going to get into that's out there for us. So thank you guys all for watching. Looks like we have a good amount of people tuning in. So without further ado, Will, let's kick things off. Thanks.
All right, sounds good. Yeah. And what we're going to do is I'm going to go through a couple slides, and I think we're going to pause maybe for a few questions because, I don't want this to be overload. I think we've seen enough of the overload these last few weeks with all this information coming out. So we're going to kind of, micromanage this webinar, so to speak, and go through a few slides and then take some questions. So this is the agenda. I'm going to go through the economic injury disaster loan, also referred to as the EIDL loan, the PPP loan, the payment protection program. We're going to get into the employee retention credit. Then we're going to talk about some deferrals that employers can take for payroll taxes. Then we're going to talk about the famous IRS stimulus payment that we're all supposed to be getting in the next couple weeks. Then we're going to talk briefly about the Families First Coronavirus Response Act. And then we're going to talk about the extended tax return payment due dates that most of us are already probably aware of. Then we'll talk about unemployment benefits briefly. And then we're going to talk, there's a couple of interesting slides that mention other relief available through either the SBA, government or public-private sector organizations. And then we'll leave with questions. So the economic injury disaster loan, the EIDL loan, a lot of us probably already have seen this in passing, saw an article, heard it on the news. What is it? Who can apply? Well, generally all businesses and nonprofits can apply for this loan. Now, what's not on this slide is how much the loan could be for, or who decides how much you get. The SBA will determine the amount that you get based on your application. We actually filled out an application and went through the procedures to see how the application was, to see if there was any confusion that you may run into when you're filling it out. And it is pretty straightforward, but there are a lot of things that are just assumed incorrectly. So I'm going to clarify that. One thing to know, like I said, the SBA does determine the loan amount, and it's on a case-by-case basis. They do allow, while you're going through the application process, during the application process, there's an option to check that you want a $10,000 advance. And apparently this is going to be funded within 3 days, even if the loan is not approved. And this $10,000 advance does not need to be repaid. So it's essentially free money. So I would highly encourage everyone that feels like they would qualify for this loan to apply. As it says on the screen here, the application process, there's 2 phases. The first phase is pretty simple, takes you about 10 minutes. It's all online, you submit it, and then I'm assuming, because we haven't heard about the second phase yet, they're going to start asking for some additional information. And then during that phase, you'll have to make sure you have all your ducks in a row, as there are some things, some SBA forms that also need to be filled out. Such as a schedule of liabilities, which essentially you have to list all your liabilities, all your credit card debt, mortgage debt, etc. Then you have to fill out a personal financial statement. That probably is going to be the most, I would say, the most difficult part of this whole application process, because many of us have never filled out a personal financial statement before. We are available here at Winter Accounting to help you through that process. We'll make it as easy as possible. And this has to be on an SBA approved form. And then also you need a current year-to-date income statement from for your business. Now that we're into April, I would assume I would probably be on the safe side and try to get an up-to-date income statement through March of 2020. And also, too, there's another SBA form. It's going to require you to fill out your monthly sales figures for a certain period of time. You'll also need to complete an IRS Form 4506T and submit it to the SBA. This is going to allow them to request a transcript of your tax returns. And also, you need to provide them with a copy of your complete, most recently filed IRS tax returns. We're seeing that the process, we're getting, based on various research, talking to some other professionals in the field, that the total processing time for a loan is going to be 2 to 3 weeks to process the application, and then another 7 days to actually receive the funds. So anticipate about a month before you actually receive those funds. Repayment term, the maximum term is 30 years. Again, that's going to be based, that's going to, the SBA is going to determine how long you have to repay that loan. Again, it's going to be on a case-by-case basis. The two great things about this loan is you don't have to repay any part of that loan until you don't have to repay it until 2021. So in January, that's when you start repaying the loan. And you also get that $10,000 advance, which I would highly encourage that everybody that's applying for this loan to check the box that you want that advance. I think that's a no-brainer. Make sure you see that box. We saw it, it's there. Check that box. And it's free money. Some final notes. Like I said, we encourage all businesses and individuals that feel like they qualify to apply. Be honest. Don't fabricate numbers. This is the SBA, and we want to be honest because this is an opportunity for us to get some much needed capital, but be honest on these applications, folks. And if you have an accountant, please make sure that you're talking to him or her about helping you through this process, because I would advise everyone to at least talk to their accountant, even if they think they can handle it themselves. Ask some questions to clarify a few things, because you want to give them complete and accurate information. And apply now. Right now, right after the website, go on and apply. Don't wait, don't put it off. Hey, we're quarantined anyway. Go on and apply for the loan. The application, like I said, is straightforward. The initial part, the phase 2, is when all the forms are due. That's when you're probably going to need some help. Then we got the famous Payment Protection Program, better known as the PPP program. Who can apply? Well, most businesses and nonprofits with fewer than 500 employees. There are certain exceptions as well.
Hey, Will, real quick, before you,
Sure.
Do you want to do a quick Q&A if there's any?
Yep, absolutely.
So if you guys have any questions about this, I'm also going to put the link in here so that people can apply.
Sure.
Right to this.
Perfect.
Bottom. But if you guys have any questions, now's the time, and we'll do a quick Q&A here for everybody. But
thanks for the reminder.
Yeah, you're good. You're good. That's what I'm here for. That's what I'm here for. But yeah, I mean, it's great insights. I mean, Entre, like we've applied. I applied. Like I have another company that applied for. I mean, you guys gotta. This is stuff that you want to take advantage of. I know my partner Jimmy. He's also applied for it through his other company as well. So it's definitely something that you guys want to take advantage of doing. Yeah, let me get this taken care of here real quick. Let me put this.
Yeah, while we're waiting on questions, I want to add one more thing. So the SBA may require some collateral. They will not decline a loan because there is a lack of collateral. They will look at what you have and they will use what you have as collateral. So just because you may not own a home or a lot of assets doesn't mean you won't get approved for the loan. So still apply.
Yeah. If you guys see,
Mike?
Yeah, there's a link. It should be going on the ticker on the bottom.
I see it.
Okay, so I got some questions here. I don't know, Charlie, if you have any questions. Okay, so my co-founder is a U.S. citizen, but I am not. Can we still apply? So for maybe people who have multiple partners, maybe they're out of the country. What's going on with that?
Yeah, well, the business itself would be applying for this. So if you're a partnership and you have partners in a partnership that are individuals and non-resident aliens, this is at the business level. So those individuals would not be able to apply, but the partnership may be able to, especially if there is a decline in operating, where there's a significant decline in revenue. They have employees that maybe they don't want to lay off. They want to maintain payroll. Maybe they have a mortgage on their commercial property that they need to pay. This would cover the interest. So it's at the business level that this loan would be applicable to.
Okay, so it's just it's going to just tie right to your business. It doesn't matter necessarily partnerships and all of that. I know there's another thing in this too with investors. If your company has more than 25% or something like that, equity tied to investors, then your business doesn't meet the requirements. Is that correct as well for people who have maybe investors involved with their companies?
That's absolutely correct. Yep, it's strictly for businesses. That's right. That's absolutely correct.
Okay. I'm going to change up this ticker slightly. So all you guys need to go to is just this. It's just COVID-19 relief.sba.gov if you want to apply for it. We have another question here. Are SBA loans the ones that will have options to forgive portions of the loans if used for payroll or certain expenses?
This economic injury disaster loan, the EIDL loan, there is no loan forgiveness with this one. What we're going to get into next, the PPP loan, will have businesses will have an opportunity to have a portion or all of the loan forgiven.
Okay, great. Let's see what else we got here. Are self-employed eligible?
Absolutely. Self-employed individuals, independent contractors, and sole proprietors.
Okay, great. Does it matter if you had 0 sales and were a pre-revenue company?
Directly, no. It doesn't say that if you didn't have any sales, you can't apply. However, I will say, this is my opinion coming up. If you didn't have any sales, a lot of startups, right? This is why we're here, mainly for a lot of startups to chime in as well. You may be looking to acquire some sales. You may before COVID-19 came about us, right? You may have been doing some aggressive spending to generate sales, and maybe you didn't get there. Maybe COVID-19 just stopped it in its tracks. Hey, you're still operating as a business, but keep in mind too, one of the forms that the SBA is going to require you to fill out is the monthly sales figures. So it will definitely affect the amount of the loan you get. However, I would still apply.
Gotcha. Okay. We have another question here from Kathy. Should you apply for both loans or just one? I think we're going to get to the other loans, but
sure.
Should you just apply for all of them?
Sure. Well, if you think you qualify for each of them, yes. I wouldn't encourage everyone out there to just go on and apply blindly. You need to qualify. So yes, you could apply for the EIDL loan, and you could also apply for the PPP loan. There'll be a distinction from the PPP loan later on in the presentation, but I'll go through that. And it's not a loan, it's more like a credit. But you can apply for the EIDL and the PPP loan, yes.
Okay, great. It looks like that's all the questions for right now. Keep them coming, guys. If you have a question, like I said, throw it in the chat on the website, throw it on LinkedIn, throw it on our YouTube in the comment section, and we'll be sure to answer it for you guys. If you don't know how to get to any of those, shoot me an email, michael@joinentre.com or info@joinentre.com. and we can get your question answered. But I'll turn it back over to Will.
Thanks, Mike. Yep, here's the famous Payment Protection Program, PPP. This is probably the loan that we've been getting the most questions on. There's a lot of confusion as to what in the heck this loan is. What does it mean? Do I qualify? If I'm self-employed, do I qualify? If I'm an independent contractor, do I qualify? And the answer to all those questions is yes. So most businesses and nonprofits with fewer than 500 employees can qualify. How much can you qualify for? Well, you can get up to 10 million, and there's a 0.5% interest rate. So it's pretty low loan. If you're able to get 10 million bucks from the government, from the SBA, at a 0.5% interest rate, that's a pretty darn good deal. However, it's going to get pretty tough to get to that 10 million, because what they're doing is they're taking the maximum of that you can get is 250% of your average monthly payroll costs, and what we believe that they're going to use for that at the time of the application, you have to take your previous 12 months payroll costs and take the average, so divide it by 12. You're going to get a number. Then you multiply that number by 250%. That's the maximum loan you can get. So hopefully that clears up some confusion. So if you're a business out there thinking, well, heck, yeah, I'm just going to apply for 10 million or a million or 500K, it doesn't quite work like that. What are eligible payroll costs? Payroll costs that are eligible are wages, salaries, tips, vacation, sick pay, retirement benefits, and state and local tax withholdings. Keep in mind, I did not say IRS payroll withholding, so your federal income tax withholding, your Social Security tax withholding, or your FICA tax withholding. Those do not apply. You have to use the funds for eligible payroll costs and other costs. Well, we just defined what eligible payroll costs are. What are other costs? Well, what they're saying is you can only use it for payroll, qualified payroll costs, or rent, mortgage interest, or utilities. The question I had up until today, when someone high up in the ranks answered it for me, how do we dictate that money can go specifically to mortgage interest and not the principal? He says, well, you're going to have to call out your lender and tell them that, hey, you just want to have this payment applied to the interest. So I'm anticipating that there's going to be more clarification on that in the near future, but by no means should that hold you up for applying for this loan if you think you qualify. The good thing about this loan, someone asked about loan forgiveness. You can get up to 8 weeks of eligible costs forgiven. So again, this is more free money, folks. Now there's a 75% rule. At least 75% of these 8 weeks of eligible costs that have to be payroll related. So that means no more than 25% can apply to rent, mortgage, interest, or utilities. So there's a calculation that we're going to all have to do, not only to determine how much we can get, but how much we can have forgiven. And by forgiven, it's not debt forgiveness that's subject to income tax. Again, it's free money. The application process, well, I saw the application, I filled it out myself, just to see if there's any inconsistencies, ambiguities, etc. It seems pretty simple. However, again, these PPP loans will have to be applied through approved lenders. So after this, I'm going to see if Mike can also put up a link that could help you get at least the application down, and maybe we can steer you in the right direction as to where you can apply. Applications will be started tomorrow for businesses, and on the 10th for self-employed individuals. For self-employed individuals.
Yeah. So thanks for bringing this up. Yeah. So right now on the SBA website, they really just have a sample document PDF that you can download, and it's under their document section. But if you just Google PPP loan and then go to the one on the SBA website, you can see it there. But like Will mentioned, you have to go through your bank really. So I already reached out to our bank, which is Bank of America, and I'm going to be talking with our rep there probably later this week about it to see what we can do with our company and everything. So whatever your bank is, they're going to probably have the most information on the PPP loan. The other loan that we just went through, you can apply yourself online, like Will said, but definitely should talk to your accountant or lawyer or whatever, before you do that, just to make sure you have all the information you need. But for the PPP loan, if I'm not mistaken, most people are going to have to go through their business banking provider, right, Will?
That's correct.
Okay. So
we have good. Sorry, Mike.
No, you're good. Go ahead.
We have a question I'd like to answer now because it's very timely. So
yep.
The question is, do subcontractor wages count? And the answer is yes. What I described as the 12-month rolling period for the average costs, that applies to all small businesses. However, if you're a sole proprietor or independent contractor, you have to take the sum of all your income for the previous year. And obviously you would not to exceed 100K. So if you made 120,000, you would tap it off at 100 and divide it by 12. And then you multiply that by 250%. That's your loan amount that you can apply for. You're not guaranteed that amount. Keep in mind, folks, this is an application. So this is how much you can apply for. So there is an amount that you can apply for, as opposed to the EIDL loan where, hey, you're going to fill out this information and the SBA is going to determine, hey, so-and-so can get this much. This is what we're going to give them. So that's a big distinction between the two. Now, if you're a seasonal business out there, you take the 12-week period beginning February 15th of 2019, ending on 6/30 of 19. Where they're getting those dates from, I'm not sure. But so far, that's what the rules say. And businesses that weren't in operation in 2019, they started in 2020. You had to have been in business as of the first, so you would take the average.
Hey, Will, real quick, when it seems, at least for me, whenever you lean down, the audio goes in and out.
Okay.
Reading off a piece of paper, could you hold it up so that when you're at eye level and talking, it's very clear, but when you go down and back and forth, it changes.
Sure thing. I think it was just blocking the speakers. Is better?
Yeah, it's good now.
Okay.
Yep.
Good. So businesses not in operation in 2019, and you just started in 2020, you have to take the average monthly cost over January and February. So you take it, divide it by 2, multiply it by 250%. That's your maximum loan.
Okay. So yeah, we had another question too, kind of relating to this. So anyone who's a 1099, if you have 1099 employees, you can put your payroll costs into this application, right, with your bank.
Absolutely.
Okay, fantastic. That's great to know for everyone who has like freelancers or contractors and whatnot. That answered Lee's question. There's another question here. Let me pull this up. I think I can might be able to bring this on screen. Okay, yeah. So, Will, do you see this? I'm not exactly sure. You might be able, since you filled out the loan before. It's from YouTube. He's talking about one of the questions.
Yeah, so you have to be a U.S. citizen. You can't be a non-resident alien if you're applying for this loan.
Okay.
I think that may answer the question.
Okay. I'll see if he has anything.
If not, let me know.
Yep. There's another one. Okay. So what support can you get for startup without revenue and no payroll expenses? Is there anything if someone's just starting out, if they're building their company, let's say they maybe haven't hired anyone yet, or if they don't have any revenue yet, but they've been working on this company for maybe a few months or a year. Is there anything that they can do? Any like costs that they can do It seems like maybe like utilities, or if they have like a rent or something, they might be able to use that.
Well, I don't think that that business would qualify for the PPP program. However, getting back to the EIDL loan, I think they could apply for the EIDL loan. Again, keep in mind though, with the EIDL loan, they're going to ask you for your monthly sales. I don't know whether they will approve loan applications where the monthly sales are zero. However, I've seen nothing to indicate that a business like that can't apply for it. Too early to tell. There's going to be probably tons of updates as we speak. There's probably an update coming out right now. So as you know, as we're speaking, it's based on fact as of now.
Okay. We have another question. I have no employees. My office is my home. Can I use the money for my home mortgage, interest, and home utilities, or some fraction of that?
That's a very good question. So a lot of us have home offices, and there's a complex calculation that goes into being able to take a tax deduction for our home office. So that's a good question. I actually don't have a clear answer for that. I would think I would try. My opinion is I would try it. I would try to have it applied. Because it is your home office. Keep in mind too, I would go based on the IRS definition of a home office, which is you have to have an exclusive office in your home that's used exclusively in a trade or business. So for example, you have a house, there's a room, you have a desk, a computer, and you go in there in the morning, you work, you're done for the day, you leave, you close the door, and that's it for the day. Right? You have a 2,000 square foot home. Let's just say for easy math, that room that you have your home office for is 500 square feet. 25% of your home, all your home costs are attributable to that home office. I would say that qualifies under the IRS definition of a home office.
Okay. Yeah, I think a lot of this stuff too, it's brand new, and we're going off of, definitions and things like that. So there's a lot of, like Will said too, there's going to be new stuff coming out. So we might even have to do another one of these in a couple of weeks, depending on what happens. So we'll keep you guys posted. And like we said from the beginning, if you have questions, feel free to email Will. It's just will@wintercpas.com. We'll put all that info in there. And then someone was asking about, they're an early stage startup, and they're asking about general like accounting services in general. So if anyone's interested in just like talking to Will about just taxes and stuff for this year, or for like filing 2019 taxes and how that affects this stuff too, which some of it does, feel free to reach out to him. I'll put, obviously his information and everything's going to be included, on the links and all of that. So definitely reach out to Will even after this is over, and he can help you out with all that stuff. Let me see if there's any other questions for that. So what about, so I'm assuming if 1099 workers are included in this, then part-time workers are as well?
Absolutely, yes.
Okay. And then same thing with full-time employees too, right?
That's correct.
Okay. All right, great. I think that is it for now. I'll stop you if there's any other questions coming in. Hang on, we have one more that just came through here.
Great.
And two more. So for the PPP, we have subcontractor cleaners in a linen service. Are they a payroll cost? Yeah, those would be subcontractor, any type of contractors, 1099 employees, they qualify, right?
So let me just clarify. So if the business is, they don't have employees, but let's say the business is a cleaning company, and the business gets jobs, and then they subcontract out to another cleaner. I think, yes, this would apply. Now, if your business was, let's say, a brewery, and you hired a subcontractor to clean your office or your your brewery, obviously it wouldn't apply. Has to be related to your business. If you're hiring these subcontractors in lieu of having employees for your business and they qualify as subcontractors and not employees, then yes, this would apply.
Okay. So we have one more question here. For self-employed who has no history and pays himself a draw or almost like a dividend, I guess, can he be eligible?
He can be eligible, he or she can be eligible for both, because keep in mind, if this person is self-employed, they are paying, and if they have a profit in their business, they are paying self-employed taxes. You may not be aware of it, but you are paying self-employment taxes on all of your profits from the self-employed business. So yes, you would be eligible for this program.
Okay, fantastic. Okay, here we go. We got one more. Airbnb. Oh, so he was responding back. So he has an Airbnb company, and they have a cleaning company that cleans the units. Would that qualify?
I don't believe it would qualify in that case.
Okay.
So you get an Airbnb, right? Airbnb is not related, it's not in the same realm as a cleaning company. So no, I don't think that you'd be able to apply for the payment protection program. However, I still think you could probably try to apply for the EIDL loan.
Gotcha.
Just keep in mind too, the EIDL loan, folks, you don't, it doesn't dictate that you're required to have employees or contractors for that matter. It just tells you that, hey, if your business has been affected to COVID-19 and maybe sales have drastically decreased, you will qualify for a loan.
Okay. Got another question here from James. So it looks like he has a detailing service. What do you think about this one? So he says, my business contracts a detailing service to prepare vehicles for delivery. Can this be considered a payroll expense as a subcontractor is operating in lieu of employees? So I guess the distinction is, are you paying someone for a service or are you paying them as a contractor for your company, right? I think this is where the distinction comes in, right?
Right. If you're paying someone as a contractor as an extension of your business, to where maybe you would be hiring individuals to deliver the cars, maybe we could argue, yes, they would apply.
So he's an auto dealer, it looks like.
You're an auto dealership. I don't believe that those contractors would qualify you for a payment protection program. Okay. But I'm assuming you have employees, so you would be able to apply it for that purpose.
Right.
You'd also be able to apply for the EIDL loan as well.
Gotcha. Okay.
So you wouldn't be, so I guess the answer is you wouldn't factor in those monthly costs that you would pay to those contractors into this average monthly payroll cost for determining the PPP loan amount.
Okay, great. We got a bunch of them coming in here. Right. So it looks like, yeah, we kind of already answered the self-employed. They can apply for both, right? I'm not sure what the PUA, pandemic unemployment.
So if that's asking, can you apply for unemployment and get the loan? No. Okay. The payment protection program is to prevent individuals from going on unemployment. That's one of the main purposes of the PPP, is to maintain payroll.
Okay.
I'm assuming that's what the individual meant.
Yeah. I guess it's not like, hey, I can apply for all these loans, get them, and then also file unemployment. So I'm getting a loan for my business at the same time I'm getting an unemployment check. Yeah. That would be kind of double dipping there a little bit.
Yeah, man, but keep in mind too, unemployment is subject to federal income tax. The PPP, you can get it forgiven. So yeah, if you do it, the PPP is the way to go.
Well, these other things, these $1,200 checks you have to pay taxes on those, correct? So as people are getting these $1,200 checks from the government, remember that you're gonna have to pay tax on that money as well, right?
That's up in the air right now. Yep. So if I had to guess, I'm probably 65, 35 saying no, it's not going to end up being taxed, because most of these other opportunities that the government's putting out, there's really no tax effect. It's more tax savings to everyone, businesses, employees around the globe, around the U.S. So I would anticipate these stimulus payments to be non-taxable. But I could, like I said, like 65% on that. We need to get them first.
Gotcha. Okay, we have a quick question here from Giovanni too. What lenders are going to make these loans? It seems like most of the big banks, like any FDIC approved bank, is going to be part of this. Is that right?
That's right. Yeah. So, for example, I know First Commonwealth. I know an individual at First Commonwealth that's hitting it hard with getting their opportunities out there. Hey, come to First Commonwealth.
Yeah. I know Bank of America is too, for sure.
Bank of America, PNC is also doing it. I've got an email from PNC. Some of the real small banks may not offer it.
Yeah.
But I think it'll be pretty easy to find a bank that does offer it.
Okay. Got another question here from the website. So if I as a contractor apply for unemployment, will the company contracting be ineligible to claim my wages for the PPP loan?
Absolutely. Yep, it's one or the other.
So if I hire a contractor and that contractor is applying for unemployment and I put them down as a payroll expense, then I'm not gonna get that, right?
That's right. You wouldn't put them down you wouldn't factor that person into the average monthly payroll cost.
Right, because they're not technically,
you're not paying them,
which is why they're going to be fined for unemployment.
Yeah, well, but keep in mind too. So see, that's another. Actually, I don't have an answer to that question, because if you think about it, the average monthly payroll costs are more historical, right? You're going back to how much you paid your individuals in the past versus what they're doing now. So that's a good question, and I don't have an answer to that. I'm assuming the business would still get the funds. Yeah, it's not asking whether or not your employees have claimed.
Yeah, it'd be tough because I don't think they would be able to track that real time. It's more like the history, like leading up to this, the last few months. Who have you been paying on a consistent basis, and vice versa. It looks like your PowerPoint maybe has went. You might have to just like move your mouse real quick. I'm just going to tell this person to email you.
Yeah, we should probably move on, and I can answer as many questions as we can through email, through phone call.
Yeah,
I want to get to the rest of the information, folks, because it's good stuff.
Yeah, let's keep moving. Yep.
All right. So one final thing. So this PPP program starts tomorrow for small businesses, and April 10th for independent contractors and self-employed individuals. So for independent contractors and self-employed individuals, you have to wait another week and a half before you can apply for this loan.
Hey, real quick, there's a question that I think applies to before we move on about credit score. Does your personal credit score have anything to do with getting these loans?
Absolutely. One thing I failed to mention in the EIDL loan is you have to have a good credit score. I think when they say good credit score on the credit spectrum, I think that's around 660, 670. Don't quote me on that, but I think if you're in that realm or better, I don't think you should have any issues with that. I know the PPP, since it's private, right, it comes to a private bank, they will likely be looking at your credit score as well.
Okay, cool. I just wanted to throw that in real quick.
Absolutely. So this employee retention credit, this is the credit that you can take in lieu of the PPP. And the next slide after this, it will go into a comparison of the two, and you'll see where one might be more beneficial to you than the other. It's all going to depend on how many employees you have and how much those employees are paid. But I'll go through a brief example with you for a small business with one employee, because I think it's real easy to grasp the concept of which one you can get and which one you'd be more, you'd get more out of. But this is a fully refundable tax credit for employers equal to 50% of qualified wages. It applies to qualified wages paid after March 12th, 2020 and before the January 1st of 2021. The limit per employee is 10,000. So the maximum credit per employee is 5,000. Keep in mind, so if you're a small business and you have one employee on the payroll, you can get a credit of $5,000 if you pay him or her more than $10,000 from March 12th through the end of the year. This credit is automatic. There's no application process. I think you can see where I'm going with this. I kind of gave away a little bit of the next slide. So which employers qualify? Employers who fully or partially suspend operation during any calendar quarter in 2020 due to COVID-19, or employers who experience a significant decline in gross receipts during a calendar quarter. Example of this is, you look at your operations. You can still continue operations, but at a reduced capacity. So I think a lot of businesses are going to qualify for this, and this is a real easy credit to get, folks. I'll move on to the next slide, which is actually the slide after this is going to go into the comparison. I added this slide not to confuse you, but to clarify what a significant decline is in gross receipts during a calendar quarter. I can probably say this 100 times, but it's probably still going to be confusing. I still have to read it slow. So you start in the first quarter in 2020, that gross receipts are less than 50% than they were in the same quarter in 2019. So the second quarter of 2019, folks, your gross receipts were 20,000. Here comes the second quarter of 2020. If your gross receipts were only 4,000, the first test is done. It starts on that quarter. And then you take the first quarter in 2020, that gross receipts are more than 80% than they were in the same quarter in 2019. What does that mean? Well, you take the fourth quarter of 2019, you say you had 100,000 in sales, so you have to have at least 80,000 in sales in the fourth quarter, and that's when it ends. Self-employed individuals are not eligible for this credit, folks. So a lot of questions that have been asked previously have been centered around self-employed individuals. Keep in mind, self-employed individuals are not eligible for this credit.
I think we might have lost Will. I think everyone can still hear me. Hang on one second. Let me bring on someone else too. Colby, you there?
Yep, I can hear you. Will did cut out for a bit.
Okay, let me see if I can re-add him in. I know you had a question too as we were going through this. If you wanted to touch on that as well.
No, someone else might ask my question on the PPP. It was about subcontractor wages, if they count, and they do, which that certainly gives a lot of flexibility for many people watching this.
Yeah, I think we just lost him because his presentation went down too. So bear with us for a few minutes as we try to get Will back on here. I'm going to shoot him a text right now. If you guys have any questions, like I said from the beginning, a lot of this stuff is brand new. Honestly, I think the government doesn't even know what's in a lot of this stuff, and banks don't even know. So, we'll spend a lot of time going through this, and there's still a lot of questions that aren't super clear. So shoot him an email. We're going to continue, keeping everyone updated on this stuff as all of this unfolds over the next few weeks and everything. But definitely shoot him. I put his email on the ticker at the bottom. You can email him or, shoot us a note. We'll connect you. If you guys have any questions, please ask them now too. That way, when Will comes back on, we can answer some of these for you. And we just had somebody ask, what's the timeline for the funds to be distributed? I'm actually not quite sure on the timeline for this. I know the PPP loan is opening up tomorrow. The first loan is actually already out. So if you guys went to that corona19relief.cba.gov, that loan you can actually already apply for. I think Will, you back on, Will?
I am back on. Not sure what happened.
Okay. Great. It's all good. Yeah, I'm a little bit cut off here with the banner, but I just brought Colby on, and it looks like you're back on. If you want to share your screen again, we can get the presentation.
Sure thing. Yep.
Yeah, we did have a question come through about the timeline for funds. I know that you. Let me pull this up. I know that you said, or the PPP loan opens up tomorrow, right? And people can talk to their local bank about that, and lenders about that. What about the other loans? What's the timeline for these?
Yeah, so the timeline for the economic injury disaster loan, you can apply for that today. You could apply for it probably a week ago. I would anticipate probably about the same process, about a couple weeks to a month. Keep in mind, because there's all those additional schedules that you have to fill out. So that's going to take a little longer. All I can say is be patient. Yeah, I don't think anyone has received funding yet. I don't even know if anybody's received the $10,000 advance. Supposedly that you're supposed to get it within 3 days. I haven't
one yet.
Yeah, that's a lot of money to be given out. We'll see.
Yeah,
it'll be interesting to see how that progresses when the first person gets their $10,000.
Gotcha. Okay, we have a question here from Alejandro. What about professional services? Obviously, you're an accountant. You have an accounting firm. What about lawyers, accountants? Can they apply for these? Are you going to apply for this, yourself through your company, or what's the deal with service providers?
Sure. Yeah. So, I will let you know a little tidbit. So yeah, we did apply for it. We are affected by it. Clients have slowed their payments to us. So cash flow has trickled to virtually nothing. And that's okay. We are here to help our clients get back on their feet. We are not just here to make a quick buck. We advise. We advise on situations like this. Hey, I took a couple of days out of tax season to get this webcast together because I know a lot of individuals needed it. A lot of businesses needed clarification. So I don't think there's a limit to industries. I think any business can qualify if they've been affected by COVID-19. And I think, I don't think there's any business out there that we can clearly say, no, you don't qualify. If you feel like,
besides maybe Zoom, who's made a ridiculous amount of money.
Yeah, absolutely right. Yep. I would say go for it. Because I'm assuming you're in the same boat as me, Alejandro. I would say if you're being affected by it, hey, you need to maintain your cash flow just like every other business owner out there. So go for it.
Okay. Here's a quick question about also about taxes from 2019. So if you had a business with no sales yet, it's important to have business expenses listed on your 2019 tax return in order to qualify. And is there anything, I guess, in relation to this that people should be aware of as they're filing their 2019 tax returns over these next couple of weeks?
Yeah, sure. So, I think the question I would have in return is, are you including all your business expenses on your return? If not, I would highly suggest your return be amended to get those business expenses on there. Because if you do, if you have no sales, that means you're probably obviously operating at a loss. Those losses will be carried forward to a year where you have income. So not even from an idle standpoint, but from a tax standpoint, some little advice, get those expenses on there. Now for the loan purpose as well, obviously, put them on there because, they're going to be looking at, what are your spending habits? Just like my answer to a previous question, just because we don't have sales folks doesn't mean we're not operating a business. Depending on what type of business you're in, a sale may happen in 2 minutes of meeting a prospect, or you may be working on a prospect for months, up to a year, maybe more, before you close a deal. But you're still a business. You have blood, sweat, and tears into your business. So absolutely apply. Now, you may not be able to apply for the PPP loan, but you will be able to apply for the EIDL loan. Absolutely.
Okay, great. And to add on that real quick, Janine was also wondering about, since you did mention the credit score is a thing, is there a way to apply with a cosigner, or should someone, if they don't have great credit, should they figure out a way to apply with a cosigner to make their credit score better?
That's interesting, and I don't have an answer to that, but I'm thinking that if you don't have a good enough credit score, or maybe if your credit score is not quite up there, I think the lender will probably make the determination whether, hey, you can get approved if you have a cosigner. Under general circumstances, I think the answer would be yes, but time will tell whether they will accept a cosigner for this or not.
Gotcha. Okay. Alejandro also wants to clarify something. So he's a beverage producer, not an accounting firm. He was wondering, so he's a solopreneur and relies on consultants, freelancers, professional services. Can he put the expenses from lawyers and accountants as business expenses into this PPP application? Does that do any of those expenses, are they covered into that?
That's a good question. So most of this is sales driven. So in the event you don't have sales when they're looking for business expenditures, they're not going to be looking at just expenditures. There's various different schedules that you're going to have to put a personal financial statement together, your profit and loss statement. Again, it could just be a loss statement, right? If you don't have any sales, so your bookkeeping fees and your attorney fees are going to be on your income statement. So I don't think they're going to base loans off of how much you're spending on your accountant, for your accountant or your bookkeeper or any expense for that matter. I think these loans are going to be more based on a combination of multiple factors. So again, I would recommend that everyone be complete with their information. I don't think by putting your bookkeeping fees and your attorney fees on your income statement, it's not going to prevent you from getting a loan. And it's probably not going to increase your chances either. But it is complete information, and they're going to want to know that.
Okay, great. Okay, let's continue on, and then we'll go through some more questions too, because I want to get you through this presentation as well.
Yeah, sure thing. So let's go. So yeah, I'm not going to go through this tongue twister again. I think it is on the slide. And I think most of us will qualify. If you have any questions, feel free to get a hold of us as well. What I finally, the last point here, great flexibility as to how the credit can be taken. What I mentioned in the beginning of this webinar is the IRS just released another more news that there is a new form. I believe it's form 7200. Yep, form 7200 if you want to take the advanced credit. So this credit can be taken. You can apply for it with a form and submit it to the IRS, and you can get get the advance a lot quicker for the credit, or what they're saying is you can just reduce your payroll taxes that would otherwise be owed by the credit. But now they came out with this new form. I haven't seen the form yet, but it's Form 7200. Only time will tell how many of these forms are submitted and how many individuals are getting their credit sooner than later. There's another interesting thing here for businesses as well. Businesses can defer their IRS employer payroll taxes. From April 1st to the end of December, employers may elect to defer payment of the Social Security tax, the employer portion of that. The deferred taxes will be paid in equal payments over 2 years. So at the end of 2021, the 2020 Social Security tax would be paid at 50%. And then at the end of 2022, 50% will be due. So that's an interesting opportunity. But keep in mind, you cannot elect if receiving assistance through the PPP. So if you get the Payment Protection Program, you cannot qualify for this deferral. This can be combined with employee retention credit, which we just talked about. So you can get the $5,000 max per employee credit for the wages. And then you can have that employee's, the employer taxes that you pay on that employee's wages, you can have those taxes deferred. So you can combine those two together. So what I'm going to talk about in another couple slides is the Family First Act, in which it pays for sick and other qualified leave for your employees. The Social Security that's reduced under that act, you can't take a credit for that, obviously, because you can't double dip. So here's the famous slide. What should you do? Should you do the PPP or the employee retention credit? Cannot qualify for both. I think we've made that clear. So which one shall it be? Well, the PPP requires an application and a waiting period. The employee retention credit, no application or waiting period. However, I will clarify that there may be a waiting period due to this new form that was just released by the IRS. The PPP is not guaranteed to qualify. You may get declined for the loan. This employer retention credit, it is guaranteed. If you are eligible, you will get the credit. The PPP, this kind of flip-flops a bit why the PPP may be more generous. It's loan forgiveness, and it can cover more than $5,000 per employee. Because keep in mind, what goes into the PPP, you can also do mortgage interest. You can also apply it to the utilities. But then there's an exception to the exception where not more than 25% can be towards non-payroll costs. So it can get pretty tricky. But in my example, for a business with one employee that makes 10, 15, 20K, the employee retention credit likely makes sense in that regard because you get a $5,000 credit, plus you can take you can defer the employer portion of the Social Security tax for up to 2 years. So here are the IRS stimulus payments. We probably all are looking forward to getting these, especially if we have children, right? And we're married and even single and head of household. Apparently, we're all going to get $1,200 at a minimum. Most of us anyway, there's some exceptions. Married individuals get up to $2,400. A married individual with 2 children, they can get $3,400. There's thresholds. For single head of household, it phases out at $75,000 of adjusted gross income. And for married individuals, it phases out at $150,000 of adjusted gross income. And keep in mind that if your 2019 tax returns are filed, they are going to look at your 2019 adjusted gross income for purposes of this phase out. If your 2019 tax returns are not filed, they're going to go back to 2018 and check your adjusted gross income on those returns. Now, there's some planning that can go into this, folks. If you don't have your 2019 tax returns filed yet, and maybe you got a big bonus in 2018 where your adjusted gross income is over that threshold. In 2019, your adjusted gross income is going to be under that threshold. Get on it, get your tax return filed before the IRS starts issuing or starts looking at returns to issue these stimulus payments. This doesn't apply to non-resident aliens and individuals that are claimed as dependents on another return. Hence the per child of $500. The Families First Coronavirus Response Act. Certain employers are required to provide paid sick leave or extended family medical leave for specific reasons related to COVID-19. The applicable period starts April 1st, 2020 through the end of the year. The first 30 days to the end of April, they're not going to enforce it. But after that, all businesses need to get on board. All businesses need to offer paid sick leave up to 2 weeks. The maximum is $511 per day for a total of 10-day work biweekly period, $5,110 total. They're also required to offer paid family and medical leave for up to 2 weeks. The maximum is $200 per day or $2,000 total. This is an interesting one. Additional 10 weeks to care for a child under 18 whose school or child care provider is closed related to COVID-19. The maximum is $200 per day, $10,000 total. So folks, if you are stuck at home and you are required to watch your child that would otherwise be in school or in childcare, your employer is required to give you up to 12 weeks due to the COVID-19 crisis. And this pay is not taxable to you as an individual, and the employer, the business, gets to deduct it, which is a pretty good deal if you are under that, because it's assistance. It's much needed assistance. Families are forced. I don't want to say forced, but they are spending a lot more time together. And children that would otherwise be supervised while the parents were out making money are now stuck at home with the parents, and now the parents can't make money. So this is a way to kind of alleviate that. And I think this is a real bold and great act to be passed in this time of need. And this also applies to self-employed individuals. Again, it's probably going to answer a lot of questions coming in. It does apply to self-employed individuals. It's a great benefit. And guess what? The businesses get a tax credit for the paid leave. So I will clarify too. So the business wouldn't get a deduction, but the business would get a credit for the paid leave. So at the end of the day, businesses don't pay anything out of pocket, but the employee's taken care of. Great benefit. And like I said, such paid leave is not taxable to the employee. Now there is an exception. Employers that have a going concern and have less than 50 employees don't have to offer paid sick leave or family and medical leave. So that's one thing to point out. But at the same time, I kind of conceptually think about it. Why would you want to fall under the exception when the business is going to be made whole and your employees are going to get paid for time that they can't be at work? So it's interesting that they have that exception, but nonetheless, it's there.
Hey, Will. We have a couple questions. At least one here that's relevant for this.
Sure.
So you mentioned the employers that are impacted by the Families First. Is that so? It's only so if your company has less than 50 employees, you're good and you don't have to worry about that. Is that
well? If they have less than 50 employees and they are a going concern, so that means if so keep in mind too. So the business is going to have to provide the employees the pay. It's going to be an out-of-pocket expense by the business initially. Right. So they're going to have to foot that cost until they get reimbursed for that in the future, whenever that may be. And that's up in the air right now. When are these businesses going to be reimbursed? When are they going to get this credit? That's up in the air. So, I guess going back to the exception, that would, that's when the exception may make sense. Hey, listen, I'm a small business. I know eventually you're going to give me my money back, but right now I don't have the money to pay out 12 weeks of pay to my employee.
Right.
When am I going to get this credit? So I think in this instance, that's where the business would fall under the exception.
Yeah. And these employees, they have to be full-time employees, right?
They have to be full-time employees. That's correct.
Okay. Okay. Go ahead. We'll do some more questions after you're done here.
Sure thing. The extended tax return payment due dates, I think we all know these, or most of us know by now. All tax returns originally due April 15th are now due July 15th. This includes the payment of tax liabilities reported on such returns. No penalties or interest will be applicable as long as you pay them by July 15th. Anyone that's required to pay quarterly estimates, your first quarterly estimate tax payment will be covered. You won't have to pay that first quarter till July 15th. However, please note, if you are a quarterly filer where you submit quarterly taxes, you still have to pay your second quarter estimated tax payments by June 15th. There are a lot of individuals out there in my profession that think that's going to change as well. But again, we'll have to wait and see. For businesses and individuals that would normally extend their returns on a normal basis, individuals, the maximum extension is going to be until 10/15. So if individuals or businesses need more time after July 15th to file a tax return, individuals will then need to file an extension, and they would have until October 15th, and businesses would have until September 15th. Keep in mind, that's only to file your tax return. That's not to pay the taxes. Taxes must be paid on July 15th, or else penalties and interest will accrue after that date. Unemployment benefits, I didn't go into too much of this on the slide because I think the whole point of all these opportunities is to prevent and to keep employees on the books, employed, working, and compensated. But partial unemployment can be taken. So if an individual's hours were greatly reduced due to the coronavirus, an individual can still file for unemployment and still have a partial work schedule. Unemployment benefits are now opened up to self-employed individuals. And finally, another $600 weekly will be paid out to individuals on unemployment. That's through July 31st, 2020. And again, that date may change depending on how the recovery efforts are going. These are just a couple other slides, some more relief that was made available. There's relief available for businesses with current non-disaster SBA loans. So if you're a business that currently has an SBA loan, the SBA will cover loan payments for 6 months. And this also applies to new borrowers as well. Let's say you're a business out there and you want to just obtain a regular loan through the SBA. Go out there and get that loan, right? Guess what? Your first 6 months are deferred. Not only deferred, the SBA will cover the first 6 payments. Pretty good deal if you ask me, if you can get qualified for these loans. There's also an Express Bridge Loan pilot program. It gets into pretty much there's a lot of detail that goes into this bridge loan, but you can always reach out to the SBA on their website and type in Express Bridge Loan, and you can read more about it and see if you qualify. We could also help you with it too at our office. Just make sure to email us at the bottom link, will@wintercpas.com. One interesting thing that may not have been known to a lot of accountants is this Internal Revenue Code section 139. It says that amounts paid to employees due to a qualified disaster are not taxable and are deductible by the employer. So there's always been this code section where in the event that there's a qualified disaster, COVID-19, employers can pay employees money due to the event. Now, certain stipulations, there are several stipulations where the employee is either falls ill, is not able to work, the employer closes up shop. So this is also available. I don't think a lot of employers will need to go this route due to the other relief efforts that I've mentioned previously, but just know that this is there. And there's possible mortgage deferral. Fannie Mae and Freddie Mac are, I think, up to 6 months. You can have your mortgage deferred where you won't be in default. Nothing will be reported to the credit agency. And even if you don't have a loan, if you have a loan but it's not through Freddie Mac or Fannie Mae, call up your mortgage lender. There are many lenders out there that are working with their clients to make sure that everyone's taken care of. So it's worth a phone call to your lender. For those that are in retirement that are required to take RMD, also known as required minimum distributions, they are suspended through 2020. So I'm anticipating that a lot of individuals are going to meet with their financial advisors in the near future and talk about this suspension, which is great because it may free up some needed cash for investing, or it'll force you to get with your financial advisor and accountant before year's end. Student loan payments made by an employer on behalf of an employee are not taxable, at least through the end of the year. These payments would otherwise be taxable on the employee's W-2. The IRS is allowing individuals that take a standard deduction on their return to now take a $300 above the line deduction for charitable contribution. So if you are a standard filer where you get the $12,000 standard deduction for single, or the $24,000 standard deduction for marriage filing joint, you can still take a $300 deduction above the line for charitable contribution. There's talks that amount may increase, and I see no reason why that amount shouldn't increase, because if that amount increases, more of those charities out there that are in the front lines helping out these medical individuals that are sacrificing a lot for us to be safe, the more money will come in to help them out. So God bless. Google committed to provide $340 million in Google Ad credits to active account users since the beginning of 2019. So if you've been a Google account user since the beginning of 2019, you may be entitled to free Google Ad credits. Same thing with Yelp. Yelp is providing free ad credits to independent local restaurants and nightlife businesses. So again, it's specifically to independent local restaurants and nightlife businesses. So only certain businesses will qualify for ad credits in Yelp, but I would encourage all restaurants and other businesses that rely on nightlife to get them through their everyday operating costs to kind of get out there and get these ad credits. Grubhub is temporarily deferring all delivery fees and offering promotion matching to participating restaurants. God bless them as well for helping these restaurants out in time of need. There's a freelancers relief fund for freelancers. You can type in freelancers relief fund in Google and find out more about that. It's funded by contributions from the general public. Same thing goes for the Pittsburgh Foundation and the Emergency Action Fund. Pittsburgh Foundation, they get contributions from all over, and they in turn provide funding to other organizations that in turn help out these individuals on the front lines and these individuals getting sick. The Greater Pittsburgh Arts Council, they have an emergency fund for artists in Pittsburgh. I think the credit is up to $500 in credits. So go check that out if you're an artist. GoFundMe has a small business relief fund program. I would highly encourage, if you're a small business, to go out there and go into GoFundMe. I think they match up to $500 of funding. For those folks in New York City, New York City has an employee retention grant program. I think for small businesses up to 5 employees, they offer a grant. New York City, again, Small Business Continuity Loan Fund is a lot of small businesses in the city of New York and the surrounding 5 boroughs will qualify. Also, Facebook has their small business grants program where they're offering grants to small businesses as well. If you want to check that out, Google Facebook Small Businesses Grants Program. You can find out more. There's also a lot more opportunities out there. This is just more of some of the more common ones, and I'm sure there's going to be more organizations and companies out there offering funding for small businesses and individuals affected by the coronavirus. And one thing that I also read too, Bridgeway Capital, they're holding a webinar on marketing strategies for restaurants during COVID-19, which is really cool for restaurants to kind of see what they can do to kind of, you know, maximize their incoming cash flow and help out communities with providing food. Setting up your web store presence during COVID-19, there's a webinar for that. And there's also a webinar for digital advertising. So I would highly encourage anyone that's interested in that to take these webinars, as I believe they're free. That's all I have, Mike. I tried to make it real simple and real easy to follow for everyone out there that's kind of overwhelmed with all this literature coming out. Yeah,
it's a lot. It's a lot, and you know, we appreciate you putting this together for the Entre community. You know, we're going to continue to roll out more stuff for you guys. We'll keep you posted on any updates. If you have any questions, now's the time. We're going to do a short Q&A before we wrap up here. Thank you all for joining. Ask your questions now, or you know, feel free if you have very specific questions for your business, you can email them to Will. But ask your questions now, and we'll wrap up here. A couple that have come in while you were talking. What about local taxes and due dates? Like we have a lot of people obviously from PA and New York on here, but even other cities and states. What's the deal with like local taxes right now?
Yep. So I know the PICPA, Pittsburgh Institute of Certified Public Accountants, put out something on you know, whether states are matching the federal extended due dates, and I think most states are coming on board where, you know, July 15th is the new April 15th of this year. The localities, again, there are many localities out there, municipalities. I'm not aware of any municipalities in Pennsylvania or New York that are extending. However, I don't know that for sure.
Okay. So local taxes, from your knowledge, is pretty much the same. Or
yes,
similar.
From my knowledge, yes, correct. So if you're in, you owe 1% or 3% in Pennsylvania, it's those taxes are still due come 4/15.
Okay. There's another one here. If you're a husband and a wife, or your partner, and you're both sole proprietors or you have your own businesses, you should apply separately, right? And do your own application.
Absolutely. Because again, all these loans are not family-based; they're business-based. So, yeah, absolutely. That's a good strategy to take if you're a husband and wife and you both own your own business. Go for it. Yeah, absolutely.
Gotcha. Okay. And there's another one here from Ian. Single member LLC or S Corp apply self-employed for PPP. I know you went through.
Yeah, so they wouldn't apply as a self-employed individual. I don't think, unless, Ian, you pay yourself a salary out of an S Corp, you wouldn't apply for the PPP program. However, I would highly suggest you apply for the EIDL program if you qualify. If you have employees in your S Corp, you may want to apply for the PPP program, but you alone would not qualify unless you paid yourself a salary subject to payroll tax.
Yeah. Or you had contractors, right? Or you
had subcontractors that work for you and not
Service.
and not for a separate business. Correct.
Okay. Okay. Any other questions, folks? We're wrapping up here. Do we have any other questions on LinkedIn or anything? Let me check all the platforms here real quick to make sure if there's any other questions, guys. But if not, we're going to wrap up here, and we'll give it another minute.
Sure.
But we appreciate everyone for joining. Like we said, we're probably going to end up having to do another one of these just because there's so much new stuff coming out. Reach out to Will. If you look on our website or just reach out to Will and tell him that you're part of Entre. He'll give you a discount on any services if you do any like tax work with him, or if you want him to work with you on filing your taxes and stuff. All Entre members get discounts on his services as well too. And he's our accountant. He's been great for us, and we trust him, and he puts in the work and does all the research on this new stuff that's coming out. So he's a great guy to know, and he's more than happy to help you out with whatever business you're in, and even different states and things like that. I mean, he's located in Pittsburgh, which is where we're at, but we do stuff in New York and all over the place. And I know, Will, you work with people in different states and cities too.
Absolutely, yeah. I mean, we're entertaining the idea of having a satellite office in New York. And to add to what Mike was saying, we're even offering for all new clients too to help with the COVID-19 crisis. We're even willing to defer any payments to us. We won't bill you until we'll honor the IRS extended due date of 7/15. So we'll extend all as a courtesy. You come on to us as a client. We won't bill you until July 15th. Just a little interesting touch that we'll put out there, because I know that now more than ever businesses need assistance, and one way to manage cash flow is to minimize cash flow, and that's what we help clients do. We help clients try to minimize cash flow. What better way than to kind of defer our fees? So we're willing to do that to get you back up and running.
Okay. There's another question from James that came in. So it looks like he uses a few 1099 contractors. At the time of the crisis, a couple have invoices out with us for fairly large amounts, probably $15K across 3 people. How do we factor these into our claim? I guess outstanding wages, like that.
Yeah. So the word I'm not an attorney, but I read everything technically, and the key word here is key. Key 1099 contractors. So I'm assuming that these are big time contractors, some of your bigger contractors that you use more often. Fairly large amounts, probably $15K total across 3 people. How do I factor those amounts into our claim? Well, if they fall into the realm of they work strictly for your business and rolling out your business and furthering your business purpose, I would factor them into the 12-month rolling period for averaging out the PPP loan qualification.
Okay. We have another one here. Is there more detail or information on the 10K grant associated with the EIDL loan? So I know you can apply to get the 10K advance. Is there any more details on that? Because when I was filling out, it was literally just like you check the box.
That's right.
Okay.
That's right. Yeah. Just check the box, and it's out there. They're saying, hey, you check the box, and there's this 3-day stipulation where within 3 days you get it, regardless whether you're approved for the loan or not. Yeah. And I anticipate a lot of people saying, hey, I want the advancement. Bless you.
Thank you.
I want the advancement, right? Give it to me. I want the 10K, and it's free money. So we'll see. Individuals. I think there are probably. I think Mike can attest that there are individuals out there that have waited longer than 3 days and they still haven't gotten it yet. So only time will tell on this.
Yeah. And if you want to, again, apply for the EIDL loan, go to I put the link again at the bottom. It's just COVID-19 relief.cba.gov for everybody if they want to check that out. We have a note from Lisa Strobel. So it looks like you have one of your clients is on, and they can to,
thank you, Lisa.
There's another guy.
Hope you're safe and healthy.
There's another guy earlier, Terrence. Just giving you some props here. So apparently Terrence reached out to an SBA employee, and Will's doing a better job of explaining it. So
thank you, Terrence. I greatly appreciate that gesture.
Like we've said, there's a lot of stuff going on. You know what I mean? I hope everyone is safe and healthy out there. And there's a lot of new information, obviously, like continuing to develop all the time. This is a brand new thing here, so there's a lot of stuff going on, and I think that's it. I don't see any. Okay, there's one more. Shoot, let me see here. Okay, when you're counting a salary, do you include yourself as the owner in that salary or in the employees as well when you're filing this stuff, right?
Absolutely.
Okay. All right.
Yeah, absolutely, especially for the PPP program.
Okay.
And also for the employee retention as well, if you're taking that in lieu of the PPP.
Okay, great. I think that pretty much wraps it up. Again, if you guys have any other questions, contact Will or us as well. I'm gonna put our email and everything in here if you guys want. If you need help with anything else, we're also rolling out. If you're on the website, you can see there's a tab called mentoring as well. We're rolling out a mentoring program for everyone that needs help during these times. If you need help getting started or growing your business, Will's a part of that as well. So, he can answer some questions for you through that program as well. But feel free, reach out to Will, reach out to us if you have questions. We're here to help. That's the whole goal of what we're doing here. We have a bunch of events coming up as well. So like Monday, we have an event with David Meltzer. Thursday, we have an event with the CEO of Hawk Media. And my email's on there as well, and we'll be following up with everyone with links and all sorts of stuff in the email tomorrow morning, going through all of this. Will, anything else you want to add or final notes, advice for people during these times?
Just, be honest, be complete, be thorough, be proactive, be safe, and most of all, be healthy. Be very careful, folks. We'll get through this together. We're here for you. We are an essential business, so we are open. We're not having any in-person meetings, but we are doing a lot of phone calls. So feel free to give us a chat, give us a call or email.
Yeah,
thank you,
exactly.
everyone.
Exactly. Yeah, I mean, we're here to support. Contact Will, contact us. You can book a call with us pretty easily on our website. We're here to help you guys and connect you to the right people. So I think that pretty much wraps it up. Thank you, Will. This was great. And if you guys want to rewatch this, just go to our YouTube channel. It's going to be up there forever, so you can always keep coming back to it and then follow up with Will if you have any other questions. Okay.
God bless everyone.
See ya. Thanks.